All right. Happy Friday, everybody. Seems like you can't decide whether to be sunny or rainy today, but it'll find its own. So here we are, August. So we're looking at the July 2021 numbers today. So again, I'm on Market Monitor and just wanted to step everybody through and stop me with questions. If you want to hit the chat box, I'll try to keep an eye on that. But here we are, Market Monitor, July 2021. So it's very interesting. So, we kind of saw this coming. Look, the July 2021 number, the median sales price was actually lower than June. And I'm not saying prices are going down, but you can see a little bit of a slowdown here, right? So July is lower than June. It's still 14.8% higher than last July. So last July was 305,000. This July is 350. So that's still a massive increase of almost 15%. But also look at the change from June to July of last year was a big jump because we were coming out of the shutdown and everybody started getting back into real estate. And then July to August was another, decent jump up. So it's going to be very interesting. And I mentioned this last month. Remember, I said this was going to slow down here, and it is slowing down because last month we were over 20% up from June of 2020. But I knew when we see this jump here, I knew we weren't going to be able to sustain that sort of pace. So now, again, 14.8% is very healthy. Don't get me wrong. But the year over year numbers are not going to be quite as favorable moving forward. And we're also getting more into a seasonality basis. So, we're going towards the tail end of the seasonality. So price, again, this is median price for all of Charleston. So remember, median means half the houses are selling for less than 350 and half are selling for more than 350. So median is more the number people look at. If you look at average, it's going to look completely different. But median kind of gives a better idea of Charleston, as a whole. It's about a 350. Half the houses are going to sell for under 350. So price per square foot, we're up 16.4%. Now you compare that to the sales price. So the sales price was 14.8. Price per square foot is 16.4. So, but look how flat it was June to July. Now, because remember the 16.4 is comparing it to last July. So, we're in that flat area here as well. Percent of original list price. Now, again, they still don't have this working 100% correctly. So we're still stuck at the 100% cap. We're over 100%, for the market as a whole. How far, we don't really know. We can dive down into MLS directly, but the median price is 100%. Now, when you look at the average, it's over 100%, which they're able to track, but the median, for some reason, is still not working. So again, half the houses are selling for, more than half the houses are selling for over 100%, half or less than that. Days on market. So we're still stuck at 3. We've been at 3 months of, 3 days on market. Basically, if you look at March, April, May, June, July, so we've been at 3 months for quite some time now, or 3 days on the market for quite some time. So again, median days on market, the best way to explain it to your buyer or seller is half the houses are selling in 3 days or less, half or more than 3 days. So, if you've got a house that's listed for 10 to 14 days, what is that telling you? That's telling you you're probably overpriced. The market as a whole. Now, again, there can be very specific properties that maybe there's a smaller buyer pool. It might take a little longer, but as a whole, you should be selling within the first couple of days or getting offers within the first couple of days if you have a, kind of a median home for the market. And again, we can go back and look at historically, 30 days was not out of the ordinary, right? When the market was kind of more of a norm. 30 days was typical. Now it's 3. So what happens now is, like, as things eventually start to balance out, what's going to happen is when it takes 7 days to sell a house, your seller's going to be upset. So this is just the market, right? It's like right now we're still flying off the market, but as things over time, when they start to normalize and it takes a week or two, your seller is going to be upset because everybody else seemed like they remember selling in a day or two. So just watch this number. We're stuck at 3. At what point do we start to go higher? And really 3 is as low as we're going to go, because by the time you list it, you take offers in, you get ratified, you put an MLS, that's about as fast as it's going to happen. So, that 3 is that low mark that we're really not going to go lower than that at this point. Months of supply. So we're at 0.9 months of supply. Now we were at 0.8 in May, 0.9 in June, 0.9 in July. We were 0.9 in April. This is definitely a bottoming out process here. For the market as a whole, I don't see us where we're going to go lower because our inventory is starting to come back up. The buyer demand on a seasonal basis will probably start to slow down. So, this is the low point here. So, from this aspect, it's only kind of one direction, and it's not going to fly up, but it's one direction higher at this point. And again, I want perspective for everybody. 0.9 months, look at this drop here. So even in these quote unquote normal times, 2017, 18, 19, 20, we were sitting around, 3 to 4 months of inventory. So 4 months of inventory for, everybody, that was, 17, 18, 19. I mean, that felt fairly normal, maybe slightly on the seller side, but it felt like a normal market. So we're down to 0.9 months. When are we going to go back to 4 months of inventory? I mean, maybe a year and a half, 2 years. I mean, it's going to take a little bit of time to get back there. It's not going to happen instantly, but we need to get back to here to have any sort of balance between buyers and sellers. So let's zoom back into 3 years. So homes for sale. So again, here's our trend. So let's go back and look again real quick. So March 2020, that's when, basically the shutdown started for COVID. So we had 5,600 homes for sale. So now we go from 5,600 all the way down. Now, again, this is the way that this MLS works. It is the way it works. It's an end of month. So it's not a kind of moment in time of a low or a high. This is just pulling a data point for the end of the month. So we actually, in May, we got down to 1,289. So that was the lowest number that I saw. And it was May 18th. So I want perspective from everybody. If I go look at it, I looked at it a few minutes ago, I think it was 1,867. So we are almost 50% higher than we were middle of May. So in a 75-day window, buyers have 50% more to choose from than they did 75 days ago. So I know it doesn't sound like a big deal, but if your buyer had 4 houses to look at middle of May, now they have 6, right? So I just want a perspective for everybody. It's like that's what's happening. Now, whatever number we're at right now, 1,867, that's still historically very low and way lower than we need to have a balanced market. We need to get back up in this range here. And you can see this market felt fairly normal, and we had 6,000 listings. So we got to get back up to 6,000 listings. How long that takes? I mean, I still think we have, 2023, maybe we're back up to 6,000 listings. I'm not even sure we get there next year. So we still have some time to get back up here, but you can see we have definitely bottomed out. From 1,289 to 1,867, and even this records, 1944 here. So, I mean, we've been over 1,900. And, we'll see where it goes, but this is why it's important, whether you do it weekly or monthly or daily, like I do. Again, I have on my calendar in my office, I write down between, or Elizabeth really writes down between 9 and 10 every morning, what's the inventory? Because that's so important to look at so that you're not, caught off guard with the trends, but we're heading higher at the moment. So it's just something to have conversations with your sellers and your buyers. If your seller's been hesitating getting it on the market, it's still a great time to get it on the market, but the trends are also changing. So it's important to kind of not wait any longer. If they're ready to go, it's get it on the market. So, and again, let's go back and look in time. Historically, we had 12,000 homes for sale in the recession. So there you go, 12,000 homes for sale. So we got down to 1,289, right? So we had about 10% of the homes for sale that we did at the recession, which is quite remarkable. But you can see where a comfortable level was, is, around 6,000 homes, is a comfortable level. And that kind of has a balance between buyers and sellers. Buyers can go look at a house twice, maybe make up their mind in a couple of days, make an offer, negotiate, ask for repairs, ask for an appraisal. So this is the market that we're going to get back to at some point. It's just not right now, because you can see this still way under the needed inventory. Let's zoom back in. But I also want to stress, we are definitely heading higher on inventory, and it's just how this slope looks going forward. Is it a quick rise up? Is it kind of slower rise up? But we are definitely heading higher. Closed sales. So this is interesting. Look at the closed sales. So what is this number here? That's a negative number, right? So what's the media going to look at? Well, we closed less last year than we did, less this year than we did last year by 13%. So now July of last year, we closed 2,435 homes. But keep in mind, that was all the pent-up closings that didn't happen because of the shutdown, right? Everything was delayed, and it all got delayed till July. So this was probably, this July number here, it's probably artificially high. These were closings that were going to happen in May and June, and it just all got delayed. So this is probably artificially high, but you can see the seasonality returning, right? So just look at these trends. Here's your seasonality, right in here. This seasonality was a little messed up, but we're starting to return to a more normal seasonality trend. So we're down 13% from year over year, but we're also down from last month. So last month we closed 2,470. This month we closed 2,109. So, but keep in mind, don't get discouraged. That's normal seasonality. June is always historically the highest closing month in Charleston. So if we go back and look in time, if you look at the peak months, here you go, June of 2010, June of 2011, June of 2012, June of 2013. So don't be worried by this trend here. That is perfectly normal seasonality. So, because of everything that's happened, we lost some seasonality over the last year and a half, but it is returning to normal. We had the low, here's your low, January, February, which is very normal season. We're hitting a high in June, and we're going to trend back down over time. So this is not out of the ordinary. So it's nothing to be alarmed by. This is just the market. We're going to return to a normal market cycle. We're going to return to a normal seasonality, and we're starting to see some of that on the seasonality. Here's the new listings. Now, what's interesting, so we listed 2,609, which normally that's not, you can see we've had highs around that the last few years, hitting about that. It just seems a little bit later in the season to hit that high. Now, why is that happening a little bit later? My opinion is these sellers are looking at these prices that their houses around them are selling for, and they're like, you know what, I'm good, I'm ready to go. If I can get that number, let's get out. So I think there's a little bit of a delayed listing period, which is also why the inventory seems to be increasing. It's the number of listings hitting the market. So 2,609 is a pretty big number for July. Hitting the market. And we'll see, watch what happens in August, in September and see that. But you can still see the seasonality in listings, right? We're going to slow down. This is going to go down at some point. It's going to slow down going into the winter. It always does. So, watch what, but, you typically have the September low jumps back up in October. So in October, people want to get we want to sell by the end of the year. You can see that trend here, September to October. Last year was all out of whack, so let's forget that for a second. But watch what happens. We might drop in August and September, a little bump in October, and then dropping again towards the end of the year. But it will start to return to this normal seasonality. Pending sales. So if we look at the pending sales here, we have 2,195. So more than last month. So we have more pending than we did last month, but we have less than we did last year. So last July, we were at the high of 2,354. Now, again, last year was kind of a delayed seasonality, so that was kind of the peak. This year, it seems like we kind of had a peak in March and April and a slowdown here. So again, this will go down as well. So your pending sales will trend lower because they always do on a seasonality basis. So, it's good to see the July numbers higher than June. We had a very good contract writing week I'm looking at my calendar, about 3 weeks ago. We had a very good weekly contract writing. So I think that's part of what the bump is. And again, you have more homes hitting the market, so there's more to choose from. So we're kind of unleashing some of that, pin-up buyer demand. They're finding houses to purchase. Here's your dollar volume. So again, June was higher than July, and June was an all-time record. So 1.229 billion in sales in June. That was an all-time record. July is lower. It always is. Don't be fretted by the decline here. It's like that's a normal trend that happens every season. Now, what's amazing is we've hit 5 months in a row now over $1 billion. So you had March, April, May, June, July, all over $1 billion. We have only had, and if we go back in time, I'm going to put a perspective for everybody. We had 1 month over $1 billion was July, right? And that's, again, that's kind of an artificial, everything was delayed. You can see that huge spike here from April, May, from May to June to July. That's because everything got delayed from closing in April and May and got pushed to later in the year. So I kind of look at the July 2020 as, that wasn't a real normal month. But you're seeing we had 5 months in a row over $1 billion. Now, I want to put this in perspective. In January of 2009, in the middle of the recession, we closed 112 million. So we closed in June 11 times the volume we closed at the low in the recession. So remember what I said, we had 10 times the number of listings, but we closed 11 times the number in volume. So isn't that amazing? We can have 1/10 of the listings, but do 10 times the volume. So just think about that for a second. 1/10 of the listings, but 10 times the volume. That's how dramatically different the market is from here. And so, that's kind of just an interesting little, numerical, we were in, some of us, I see Crompton on here, Frank's on here, Jan's on here. Some of us were in the business back here. And it was not like it was today. So be thankful for where we're at today. So let's zoom back in again. So shows to pending. So it's interesting too, look at March, April, even February and January. We were getting 15 showings to go under contract. Now we've dropped, so to speak, to 12. 12, historically, and we only go back so far on showing time on this, but that normal ratio is like, if you get 12 showings, you should be getting a contract. So, this is a good gauge for where we're at. We had hyperactivity in here, and not to say that we're not normal, but we're shoving all these showings in a short period of time. So what I tell sellers and buyers is what your normal 30 to 60 to 90 day window is, we're doing it in 3 days. As soon as something hits the market, everybody's running out and look at it that's on that market at the time. And they're not like, oh, I'll go look at it in 2 weeks. They're instantly doing it. And also keep in mind that instantaneous is partially because how many agents are coming through your house FaceTiming the listing to their out-of-town clients. So part of these showings would normally not have happened for 2 or 3 weeks when that buyer was coming to town. It's all happening in 2 to 3 days. So, you see here the trend is lower. Let's see what happens the next couple months. but it's showing that slowing down in, showing demand. And here's the shows per listing. Again, we were at 12.8 in April, 11.6, 10.7, 10.1. Again, a downward trend, but this is normal seasonality. What happens here? We just have, had a spike, and this spike happens. So shows per listing, what happens when you get more listings? You get less showings, right? Per listing. So what's happening here is a combination of maybe a little slowdown in buyer demand, but also additional listings to choose from. So, you might get ruled out because there's other options that they know online are already better. So this is just something to watch. And again, this is just through showing time. So, showings that are happening, not through our MLS are not showing up on here. We can't track that. So this is only showing time on here. So again, that's MLS as a whole. But I thought I'd also show you, let's break down the market a little bit more. So on here, let's go and just watch this. So let's just do Mount Pleasant. And I'm not going to go through all these numbers on here, but if I select Mount Pleasant on the list, come on. There we go, Mount Pleasant. So here's Mount Pleasant. So look at the median price in Mount Pleasant, right? Does anybody remember what the market was? It was 14.8, right? Look at Mount Pleasant, 25.1. And is that trend lower from last month or higher? It's higher again, right? So Mount Pleasant pricing from a median price is 25.1%. So just to be easy, is 25%. The market as a whole is 15. So from now remember, this is from last July. So if we go look at last July, we're 490. So we went from 490 to 613 basically in a year. So that's why it's almost getting impossible to find an under $500,000 single family home in Mount Pleasant. There's so few, and good luck finding a 4-bedroom under $500,000. So you're watching this jump in prices here, and Mount Pleasant still seems to be ahead of the market as a whole. Price per square foot, again, up 20%, which is higher than the market as a whole. Now, for whatever reason, they show 100.7 last month. I still am not sure I trust this data that it's not well over 100%. So take that with a grain of salt. Median days on market, 3. We've been stuck at 3 for a while. I don't think it's really going to go lower. Months of supply. So why do you think the prices are higher in Mount Pleasant? It's because the months of supply are lower. There's a direct correlation between months of supply and what prices are doing. So months of supply is showing to me that Mount Pleasant has higher absorption than the market as a whole. Therefore, the prices are going up higher. There's a direct correlation there. Now, it's not a big change, but you can see we've been at 0.6 for a while. So 0.6 in March, April, but then we got down to 0.5 in May, 0.5 in June, 0.6 in July. Is this a bottoming out? Yeah, I think it is, but it bottomed out lower than the market as a whole. That's why those prices are going higher quicker. You just have more demand with less supply. Look at the homes for sale. Again, not a big jump, but 141. So we went from 141 to 159 to 180. That's a trend, right? So we are trending high now. Still a lot less than a year ago, but we're trending higher on the Mount Pleasant inventory. Closed sales. So again, a pretty big drop from June to July. Part of that is because we're not listing that many homes, but that's a traditional seasonal trend. New listings kind of flat. Not many new listings. Pending, less pending, but we have less for sale, so that's why we have less pending. Dollar volume, big drop in dollar volume, but again, it's just less, less for sale. Shows to pending, dropping like the market as a whole. So I mean, we were hitting 20 showings per listing until it went under contract in Mount Pleasant. What was the market as a whole? I think we peaked at like 15. So you can see Mount Pleasant was shoving more people in there in a shorter period of time, but it too is dropping off. Shows per listing. So we're at 12, which is higher than the market as a whole. and we got up to 17.5. So you can see Mount Pleasant relative to the market was and it still is ahead of the market on price and absorption. So I think that's a good reference point for everybody. Now I wanted to show, and I saw Karen just joined us. So good timing, Karen. I'm gonna go to MLS area 51. So look at this. So this is interesting. Let's start with the sales price here. So very flat on sales price, right? Which is very interesting. I mean, almost no, and yeah, you have your peaks and your valleys because there probably were not many closings that month. But you look at median sales price, it looks so flat. But let's look at some other trends. So price per square foot's flat. But here's just letting people in the waiting room here. So here is, so median, so this is where it gets interesting. So this is just MLS area 51. So look at the median price, right? Percent of original price. So we were at 94.9 just 2 months ago. What have we done the last couple months? 97.2, 99.4, right? That's a pretty significant change in a couple month period. Whereas historically it's been, yeah, we had a little bit lower at the end of 2019, but fairly range bound around 95%. So even during everything that's happened, it was still sitting in this range. And then all of a sudden the last couple months, look at this jump. Look at the days on market. Look at this drop. So even February of this year, we were at 134 days on market, median. And then look at the trend. We're down to 7 last month, right? So that is a significant trend in the downward direction, which is showing me, I think we reached that precipice downtown where the inventory got low enough and the demand got high enough, it completely flipped into an almost an immediate seller's market, time delayed from everything else, but down to 7 days on the market on the peninsula, area 51, that's amazing how quickly that changed. Months of supply. So again, look at that trend, even, we started at 14 months, which traditionally, what's everybody calling it? They're calling it a buyer's market. So we went from basically having a strong buyer's market, and the trend just has dropped off and is continuing that direction. So this is kind of opposite of what the market's doing as a whole. So we're down to 3.4 months of inventory, which is now we're in a seller's market downtown. So we've gone from a strong buyer's market to a seller's market, still what appears to be trending lower. So there's a time lag that happened downtown. What happened to the market as a whole that started a year and a half ago, it almost seems like it started downtown about 2 months ago. Those big drops all of a sudden started 2 to 3 months ago. Homes for sale, look at that drop there. So we're still trending downward, 197 for sale, and we were at 456 July of last year. So again, a drop downward on that as well. So 197 for sale, which is 57% lower than a year ago. And this trend still looks lower, whereas the market as a whole looks like it's trending higher. Closed sales. So look at this jump in closed sales that happened over the last few months. Yeah, last month was lower, but it was probably lower because the inventory is lower. But we had a good few months downtown, hitting over 80 sales a month downtown. New listings, kind of flat, right? Yeah, you have your seasonal trends, but not really any significant jumps. And we did not list many last month, which is part of the reason why you're not going to be able to sell as many if there's not as many listed. Pending sales, we had that big jump in pending sales. It's still staying up there above historical levels here. And then the dollar volume jumped as well. Now, as you have less closings, of course, the dollar volume is not going to be able to keep up, but there was a big jump. Now, a lot of downtown, it's showing off of, showing times not used exclusively downtown, but you can still see that jump, in showings per listing downtown. So it was remarkable to me when I looked at downtown, it seems like all of a sudden somebody flipped a light switch 2 to 3 months ago, and downtown started to catch up with the rest of the market on absorption and pricing and the trends. It feels like it's getting into this really strong seller's market all of a sudden, that it wasn't participating in part of this for a while, but now it seems like it's there. And I don't know if Karen has, or anybody else that does downtown, has anything to add to that, but I certainly see a different trend downtown, especially over the last 2 to 3 months. So, for everybody on here, I wanted to give a couple examples. Every market can act differently, right? So we looked at the market as a whole, and it looked like one market. We looked at Mount Pleasant, it looked like a stronger market. We looked at, downtown, and it is even an improving market from there. So everything is trending a little bit differently. So depending on what price point you're in, what area of town you're in, what product you're selling, it's very important to understand the difference between what the market is, because not everything's reacting the same way at the same time. So, again, you can go on here, this is paid for in our MLS, you're paying for it one way or another, whether you use it or not. But if you come in here, you can look at any of these areas, you can break it down by zip code, by subdivision. Now, I don't recommend going, unless you have a massive subdivision with a lot of sales, I don't really recommend that, because if there's not many sales, it can really distort the data. So, but you can break it down any which way that you want and see what the trends are. Even if we go out to, let's go out to Wild Dunes for a second. So, again, when you don't have that many sales, you can really jump around in, the data point. That's why it's important to have, as much data as you can. So days on market in Wild Dunes. So, we're down to 4. And again, this chart for relative reference, we're at 100 to 200 in some places. So 4 days on the market in Wild Dunes. So again, they're participating in this as well. Is that now, we got down to 0.9 months, a month, a slight upward tick. We'll have to watch that and see if that continues. Homes for sale. We had 128 homes for sale May of last year. We got to a low of 21. So, and this is everything, single family home, it's everything residential. So you can see the difference in, the closed sales, we've been consistently above 20, which again, for Wild Dunes, for not that big of an area, that's a pretty good number to hit. Dollar volume, obviously higher as well. So, and you're watching some of these sales. I saw a $10.5 million sale on Sullivan's Island. There's another one under contract over 11 million down there. You're seeing sales hitting numbers that we've never seen before. But again, watch every area individually. And this is kind of my portion of the market that I wanted to talk about. I have a couple other things to talk about, but does anybody have any questions and comments on the market conditions right now that they want to share or ask? So one thing I learned, so you learn something every day in real estate, right? So I had a house representing a buyer under contract, and I just wanted to share everybody, this is the appraisal. I know John had brought in an appraiser a couple of weeks ago to our team meeting, but this is something else I learned. So I had an appraisal done for representing a buyer of mine. We were under contract at 335. The appraisal came in at 310. So my buyer was not going to be able to move forward because the seller was not willing to reduce the price. But what I did was that I knew a couple were closing. So from a closing standpoint, so relative numbers, contract 335, the appraisal was 310. There was a 342.5 and a 350 that were going to close almost immediately after the appraisal. So what I found out is that you can argue about the effective date on the appraisal. So when you get a copy of an appraisal, you're going to have what they call an effective date and a submittal date. So the effective date is the date that basically the value is determined. So if you have an effective date and there's a closing after that, that appraiser is not allowed to use that closing as a data point. So I went back to the lender and I argued, can we resubmit and change the effective date? So the lender went back and all they did was change the effective date. Appraiser didn't have to go back out there, but it allowed that appraiser to add those two comps. It allowed them to add the two comps to the data. And once those two comps were added, our appraiser changed from 310 to 345. So we went from basically not being able to close on the house to being well in the good and being able to close on the house. So, and it was very simple process of changing an effective date. Now, you have to have a comp to justify it. But if you have a comp or two that is closing, after your appraisal effective date, and it's going to change the value where you can get it, meet the sales price, go to your lender. It has to come through the lender. You can't just ask the appraiser to change it. The appraiser is dependent on the lender to submit a request to change that effective date. So that was something that I learned that saved a deal. I also learned from an appraiser that I was with the other day that the effective date is essentially the day that the appraiser is out at the property. So that's how the effective date is determined. So and again, I have an agent that helped me out, that I asked on another deal. Now that I've learned this, I had another transaction that there was a closing that was happening the day the appraiser was out there. So I can tell you, the agent was very helpful. I said, can you close it out immediately after, it closes? And so it's important, if once they're closing, it's not only important that it closes, it's important that that agent updates it in MLS. So for all of us, that's why it's critical to get this data in there, because we are having some appraisal challenges. But if it's in the MLS and put in there accurately and closed as soon as possible, appraisers are using that data, and it can be saving other deals for appraisal. So it's something to keep in mind moving forward. If you do have, an appraisal issue, as long as you have comps that are closing, you can request the lender to change the effective date. So just a lesson learned by myself, just sharing with everybody. So well, that's really, go ahead.
You had asked about questions. Whenever there's a good time, I have one.
Okay, go for it.
Oh, by the way, thank you for that last thing about the appraisal. That was fantastic. I was just curious because I was looking at what you were talking about the effect of COVID artificially, bumping up the closings post-COVID. But I was kind of perplexed by it because when I was looking at the chart, when you look at the downs, there wasn't a down spike that equaled out to the up turn afterwards. The downsides looked about equal to the previous periods. And so it was kind of perplexing to me trying to figure out what actually happened there.
Well, there really was a down period, but it was in the middle of an up period on the normal seasonal cycle. So I'm pulling up this chart again. So you can see here's January of 2020, right? We go to February to March. So what normally would happen in April and May? Which way would it be going? It would be going higher, right? So this is dollar volume. So traditionally, and if you follow my cursor, traditionally we should have been doing this, right? But what did we do? We went this way. So really that downward trend that you saw is reflected in April of 2020 and May of 2020. So these 2 months were the months that closings were delayed. Now we still had 500 million in closings, but these were the months that the closings got delayed or lost the deal, so this 2 month period should have been up here, right? So it doesn't look like a downward trend from here, but it really was if you think about where the trajectory should have been. And that's why the July numbers look so high. It's because it's kind of making up for what should have happened in here. So the normal chart would have looked like this, right? Just rounding that off. But what happened is we had that drop for those 2 months. So there was a period of time during COVID that we fell off.
Okay, thank you.
Does that answer your question?
Yeah. I'm just, I'm trying to get the whole concept of the market.
Yeah, and it's, you just got to keep in mind, and if we go back, let's go back, Max, you can see the seasonality, right? No matter what the year, you can see the seasonality, right? So you can see that trend every year. And this period of time has kind of been a little out of whack because of COVID, but it will return to a normal seasonal trend that you see here. And I also wanted to put, reference for everybody, I see Susie's on here and Karen, a lot of us have been around a long time, but for those of you that haven't been around as long, so my best year ever was 2013. And you're like, well, that's kind of a weird year. Why was that your best year ever? Well, what they don't show on any of these charts is your agent count versus volume, right? And the volume started jumping in 2013. And here, for a reference point, watch this. So we're going to go look at, because most of my business is Mount Pleasant. So let's go look at Mount Pleasant. And I just want to, share with everybody, it doesn't matter what the market's doing. You can still be successful as an agent. You just have to know how to react to it. So here we go. So what I wanted to show everybody is this is Mount Pleasant only. And what's happening is, look at the volume, and I know it's hard to see. Mount Pleasant only did 27 million in volume in January 2012. But all of a sudden, by the middle of 13, we were doing 100 million. So this, if you annualize this, we went up 50% in volume in Mount Pleasant from 2012 to 2013. So if you were a normal agent in Mount Pleasant in that time period, and your volume went up 50%, that was because the market did it. That was really, the market increased the volume. You didn't do anything. You just happened to be here, right? So this is the trend where you can take advantage. I mean, right now we're up in this sky zone up here, which is, there's a lot of volume happening all around, but even when the volume was this low, you can still be a very high producer as long as you're capturing that market share. So even in the downturn, when we go seasonally on a downturn, you can still be able to produce. It's just you have to ride these waves and cycles and take advantage of that market. So and even to this day, I don't think I'm going to sell as much in 2021 as I did in 2013. It's because I had such a high market share when the volume was increasing, right? So again, if we fast forward to 2021, we're doing a lot more sales in Mount Pleasant than 2013. I'm still not going to sell what I did back here. So it's just a relative reference, is that you have to watch the market cycles, the trends, over time, and you can't control the volume, but you can control your market share. So it's just lessons learned, is that it doesn't matter what year it is, you can still sell a lot of real estate. It's just capturing that market share. So that was just a side note that came up. So anyway, anybody else have any other questions?
Yeah, I have one. How do you do the search? I know you said unless you have a big neighborhood, don't worry about it. But just out of curiosity, how did you do the search by neighborhood?
So you can, like on here, if I just click this tab here, I can choose on everything. So that's going to be all MLS, county, zip, subdivision, subsection, area, or city. So this Mount Pleasant one, I just picked city. But if I go to all, that's going to show the entire MLS. So you can flip between that. Now, you can also compare areas. So if I wanted to say, okay, let's just do a comparison. So let's just do two areas. So let's do area 42. So here's area 42, right? So that's still a lot of data. So that's enough to kind of get trends, but you can add an area here. So if I add a second area, I can compare, and again, this green now is the entire MLS. This blue is Mount Pleasant. So
I see. Okay.
So you can compare areas, and again, comparing the entire area to, comparing all of Charleston MLS to one area doesn't make a whole lot of sense, but you can also let's do area 41 versus 42. So you can see how they relatively mirror each other, and you can see the trends, but so here's dollar volume. So dollar volume, July of 2021, area 42 was way under last year, whereas area 41 is about flat. So that's kind of an interesting little, kind of tidbit of information. Here's, months of inventory, pretty similar. So you can compare areas if you want. So look, area 41 was trailing area 42 for years, right? For years it was trailing. I'm sorry, area 4 this is homes for sale. So it was above area 42. And then now it's almost even, right? 91 for sale and 42, 90 for sale. So it's kind of interesting. Sometimes you can compare areas.
Yeah.
So, and you can add, you can't add too many without getting confusing, but comparing two areas is fairly legitimate to compare.
Yeah.
And again, here's how I changed. I can go back in time, so I can go all the way back, max, I can zoom in. You can do monthly,
Oh, okay. Yeah. I see where you can do it up to 10 years here.
right? So if I do, so watch this. So if I do a rolling 12 months, so rolling 12 months is going to take your 12 months of data. So this, if you flip over to rolling 12 months, it gets rid of any seasonality. So you don't see any seasonality. This is the best way to look at market trends. Is your market higher or lower? Because it's getting rid of any seasonality out there.
Right.
So that's a good way to, kind of break it apart. And you can see, like what I was talking about earlier, look at the jump in volume. If you get rid of seasonality, there was a big jump in volume 2012 to 13.
Mm-hmm.
So basically at the beginning, we were about 250 million. By the end, we were almost 500 million in volume in some areas. So this is a good way to get rid. So use these two to either go back in time or get rid of seasonality. I don't really see the point in rolling 3 months or rolling 6 months. I never use those. I'm either monthly to see the seasonality, or rolling 12 months gets rid of any seasonality. So when you get rid of the seasonality, look at that jump, in volume. I mean, that's unprecedented, like the last year and a half of what we've seen. This was pre-recession here, right? So you saw a run up and then the slow down, but nothing like this type of trajectory. So, I mean, and everybody maybe a final point here. So months of supply, right? That's the number one gauge to tell the market. We got up to 15, 18 months, and let's get rid of all these. Let's go back to MLS as a whole. So this is where it's a good, if you get rid of seasonality during the 12 months. Look, we were hit in 16 months of inventory coming out of, we were down to 3. So pre-recession, we were 3 months. So we went from 3 months to 16 months. And now we're basically, now this is rolling 12 months, we're down to 1.4.
Right.
So, if you're an agent back here, you had to carry 16 average listings to sell 1 a month, right? How many listings do you have right now, right? You had to carry 16 to sell 1 a month. That's what the market was like. That's the easiest way to look at it. Here, you carry 3, you sell 1. Here, you carry 1.5, you'll sell 1. So on the annual basis, we're still twice as fast as we were pre-recession.
Mm-hmm. Okay. So currently on mine, I have the entire MLS, Johns Island, and like, how do I add that specific neighborhood? Like I'm still trying to figure out like where that button
So
is.
if you hit this drop down here, you can add a subdivision. So if I click on subdivision, it's going to bring up all the subdivisions.
Okay, I see it now.
Right. So if I have a big subdivision, so if I do Cane Bay, there's enough numbers on there where it makes, and even if I get rid of this, so here's Cane Bay as a whole, months of supply. So it can make sense if you have a big enough neighborhood.
I see.
If I pick a small neighborhood, with no data, it doesn't make any sense. There's just not enough comps. So
yeah, I'm seeing that now.
That's my only caution with going too specific, is because you have to have data to be able to analyze it. So
So for subdivision, you really need a situation where you're like in Nexton or something like that, where there's like thousands of homes over years.
Yeah, you need a big subdivision. If not, use MLS area. You can even do price points.
Yeah.
Right. You can customize. Hey, I want to look at 500,000 to 600,000. So you can do custom. You can do price points. You can do land. You can do single family versus townhomes. You can do new construction.
Right.
So anybody who's on this, play around. You can't break it. Just play around with it, learn it. But it's a tool that will help you understand the market and be able to convey this to buyers and sellers.
Right. All right. I appreciate it.
Sure. All right. Well, I hope everybody has a great weekend. Go sell a couple houses or go enjoy yourself, or both. So thanks for everybody's time, and Samantha, I'll stop the recording so you can use it.
Thank
But,
you, Anton.
Thanks. Have a good
Everybody
weekend.
have a great
Thanks,
weekend.
Anton.